Okay, so today we've got another awesome interview for you guys. Today we're going to be interviewing Leon Rowe. Leon and I have known each other for quite some time. He was one of my first original students, and Leon made that transition successfully from struggling trader, not knowing what he was doing, to now being a profitable and consistent trader. Leon, welcome.
Hello, Mark. How you doing? You all right?
I'm good, thanks, mate. How are you?
Doing well on this nice sunny day. You
Yeah,
know,
it's nice, isn't it? About
yeah,
time too.
and
Good stuff.
mm,
Yeah, London's always a touch warmer.
yeah.
Okay, so I guess the best place to start is at the beginning. What got you into trading? What were your early experiences like, etc.?
So what got me into trading was about 2005, end of 2005, begin 2006. I got into buying gold and silver. I remember listening to a podcast online that was talking about the upcoming impending financial crash, and so they kind of pitched me on buying gold bars and coins and stuff. So decided to invest in that. Family thought I was a bit crazy for doing so. you know Gold bars, what are they? Gold coins. So did that, made a bit of money off of that. 2011, 2012, prices started pulling back. Obviously making money when, gold goes up for the
Yeah,
long.
it was flying. Yeah.
Right. So I started pulling back, and a friend of mine around 2000, I think maybe about 2012, started, well, he was spread betting and said to me, oh, why don't you start, spread betting? So I was like, nah,
So
no.
for people who don't know what spread betting is, just because it's we know it, we've been in the UK, but it's not widely known.
So spread betting is where you are basically buying gold. You're basically betting on the price of gold.
So you're speculating on gold, right? But
Well,
but there's a tax advantage, isn't there, in the UK to
tax free.
yeah.
That's exactly it.
Yeah, so it's like trading, it's just considered speculation. So in the
Exactly.
UK, gambling's tax free. So
Yeah.
yeah, go on, mate.
So that's pretty much it. Obviously, with leverage, you can make a lot more in a shorter space of time. And I put it off for a little bit, and then decided to jump in around 2013. Opened up my spread betting account. It's funny because I didn't even know what a stop loss was.
Well, we laugh now, but I mean, even if we sort of extrapolate that into 2018, anyone who's coming in is probably in that exact same
Exactly.
place, right? They're starting without knowing what a stop loss is, hence why there's so much bad press surrounding the industry, because people are just going for it with absolutely no understanding of what they're doing. So
Absolutely, and I was
scary thought.
I was one of those people. So
Yeah.
the way I kind of looked at it was, I put about 15 grand in the account, 14 grand in the account, and I should be all right. There's no way that price will go down to a certain price for me to really kind of really lose
Wipe you out.
or anything
Yeah.
like that. Exactly, wipe me out. And so if you look on the chart and look at the weekend of April the 12th, I think it's the 12th, 13th, 14th, 15th, around that, gold went down. The most it had done, I think it was at the time, in 50 years over that.
No way.
Yeah, absolutely, with no stop losses, right? I had no stop. Totally just wiped me out. You know,
Right.
totally wiped me out. And then me being I suppose the logic behind it was, well, if I can lose, I can blow up my account in that time, I must be able to make it back, because if you can lose it, then you must be able to win it. So pretty much just chasing profits. Yeah, pretty much from there, that was really how my journey into spread betting gold at first, and
Right.
getting basically just trading in general that world really kind of started.
Okay. So yeah, that was the beginnings of that major pullback.
Yes. Exactly. Exactly.
Right. Okay. And was there any strategy to this in those early days, mate, or were you
No, well, in before I started,
it's going up, buy, it's going down, sell?
yeah, that's pretty much it. I was buying at highs, That's- you know,
All done it.
yeah, buying at highs, and then again, there was absolutely no structure to it. I was going, discovering, different time frame charts. So, going down into 4 hour, 1 hour, 15 minute, 5 minute charts, looking at price action from there, trying to, buy and sell. Again, I didn't even know support and resistance until I joined a service, a trading education service. Spent
So what
money
did you
with.
do that for? Just because well, you tell me. Was it just because you knew there was gaps in your knowledge?
Yeah, so obviously, losing that money, I thought, okay, I needed some sort of structure, with trading, some sort of system. Was looking on YouTube, discovered these guys. I wasn't really too much into, at the time I was thinking, and it's nothing, no slight or anything, but, I went someone British, and someone I could kind of talk to, etc., that could relate, that are different, same time zone, etc.
Yeah, yeah.
Discovered two really nice gentlemen, to be fair. Won't mention their names, but really nice guys at the time. And basically bought their course, spent quite a bit of money on it.
Do you
And
mind telling us what you paid for that?
well, it was 4 grand.
Okay, so about $7,000, something in
That
that
for
region.
for a period of time as well. I think it was it for 6 months or was it for a year? I think it was something like maybe year. So that's 4 grand each.
Oh, so it was limited as well.
Exactly.
Wow.
So, but I was thinking to myself at the time that,
Yeah,
4 grand in a year, I must be able to learn to trade within that time.
yeah.
Well spent. And, you know, again, going through their course, was definitely a learning experience. But, as you were speaking about earlier, it was purely kind of technical and some fundamentals as well. But
Right.
what I they didn't really cover in any kind of way at all, other than maybe the basics, to be fair, was the psychology as well behind, which I think is absolutely essential for you to be a successful Forex trader, and
Yeah,
discuss.
we'll definitely explore. We'll explore the old psychology in just a bit. So so talk to me a little bit more about that then. So at the end of that process, had you made your 4 grand back? Had you been making money, or
No,
what happened from that?
no. So what happened from there was, wasn't making any, serious money, consistent money. And then while I was with them, I was system hopping, as you do. You lose 5 trades, and then think to yourself, oh, this isn't working. I started combining their strategies with other strategies that I saw online. It was a real mess. When I look back on, things and what I was doing, I'm sure there's many traders out there doing the same thing right now. Because you don't really know, someone might have a certain strategy and way of trading. And when you start combining other indicators to try and make it better, it can get very, very messy. Very, very messy. You're not, I didn't even know about back testing, to be fair.
Right. Yeah.
Things like that.
So
It was just, okay, well, add the RSI on, add the MACD on, add the
yeah,
on, add the moving averages on, to this strategy, see if it works.
yeah. And I mean, just on that point, what you've highlighted there, that you hadn't done any back testing.
No.
Um, I did an interview, so if anyone hasn't seen it, it's actually offline at the moment. No, it should be back online by the time you watch this interview. But it's an interview I did with Sam, and basically he figured out fairly early, although I don't think he thought it was that early in his career, that back testing provided him with the confidence to stick to a strategy, and obviously everything else that goes with it. So if you're not doing that, if you're not starting from that perspective, you're going to find it very difficult to deal with the psychology of moving forward after taking a loss and things like that. So yeah, it's probably a very common situation you found yourself in.
Absolutely. So You
So how
know,
did you get out of it? What happened? What happened
well,
next?
for I think before I met you, then I was buying course after course
Right.
but it's a bit of exaggeration, but courses spent again in the tens of thousands on indicators, courses
Really?
from buying this, buying that, seeing if it worked. Again, I never got into any kind of robot trading algos or anything like that. Just indicators to show me when to buy and sell, webinar after webinar, everything.
The old green and red arrows.
Yeah, everything. So been there, done it. And then again, always going back to kind of YouTube to discover maybe the latest strategy, and then discovered you know and your videos were just very different from what everybody was talking about. You were more about the psychology behind the trading process and setups, rather than, oh, this indicator is oversold, or this is a Gartley or a bat pattern, buy here, sell there, support resistance, etc.
Yeah, I love YouTube. It's but I think YouTube helped you in your process. I think YouTube's a great source so long as you're able to sort of separate the wheat from the chaff.
Oh, definitely, 100%. There is certain information once you get into that world. So, for example, at first, when you don't know what you don't know, right? So everyone's,
Yeah.
when you get into watching videos, everything looks good, sounds good, but then the more videos you watch from other people and other traders and educators, you realize that a lot of them are actually just saying the same things.
Yeah.
So then when I discovered you, it was literally a breath of fresh air. It was just something totally different. So it was like, okay, let me hear what this gentleman's got to say.
So you jump on board.
Right.
What were the major key differences? You mentioned the psychology and things, but what was different? What changed? What were the biggest lessons you actually took away from what we did together?
Okay, so the biggest lessons: fundamental analysis, psychology, so law of large numbers, random distribution of numbers, and accepting probability, things like neuroplasticity. Bloody hell, there's so much.
So let's explore, unpack a couple of these at one time. So the law of large numbers. Please explain to me what that is and how that helped you as a trader become a profitable trader.
So the law of large numbers is pretty much that you're going to, over a large sequence, or short sequence, I'll explain like this, right? So over maybe 10 trades, right? You are going to potentially have maybe, 8 losses, 2 wins, or 7 wins, 3 losses, for example, right? We don't know. Every trade is a coin flip, but over a larger sequence, we will get to an average, if I'm kind of explaining that right.
Yeah, so what you're saying is over the short term, the law of large numbers, it's essentially a theory in probability theory that dictates that over the shorter term,
Yeah.
the numbers are lumpy and erratic. So the best way to give an analogy, I guess, is a coin flip, right? So it's dead possible, and I've talked about this before, it's not scientific if you sat there flipping a coin, but imagine it was, the forces are all the same, the atmosphere is the same. You flip the coin 10 times, you have 8 heads, 2 tails.
Right.
Well, how come? It's 50-50. But over the short term, probability distributes in that lumpy and unpalatable fashion.
Mm-hmm.
And that's where a lot of traders essentially get stuck.
Exactly.
And that's where the system hopping comes in, and just that constant lack of traction. Going to the future, however, you get to the expected value, and the important part to mention is that it goes away from the expected value as well into the future. So it's not a perfect. It's not like you get to your trading win rate and it stops there.
Right. And that's
It comes away from
and
it
that's
again.
exactly what I discovered, is that I was looking at short-term trades. So I was looking at, I need to get out of 10 trades, I need to get, at least 5 out of 10 if every trade is,
Yeah.
a coin flip. Whereas I could get 10 losing trades in a row, but it doesn't mean that the, trading system or strategy is not profitable. You have to have
It's not
at
profitable.
least, at least 100 trades, and perfect process trades, not just, wishy-washy, half process trades where, you're not taking trades to the best of, your ability and, following the process to a T. You have to follow.
So,
Sorry, go on.
sorry, mate, go on.
You have to follow it to the T, do your best trades, the best setups, and then over a longer period of time, you will then understand where you are with regards to, again, the law of large numbers.
Essentially, yeah. So whether you're profitable or not at that
That's
point.
exactly it.
Yeah. So let's just unpack a few of those things. So yeah, we'll get into process, but just explain to the listeners how though has that helped? Because obviously thinking of it in terms of a coin flip is super helpful in this process, but we are trying to improve the odds of those coin flips, right? But then that comes through skill set and learning and education and time and things. But just unpack for me, if you would, on an intellectual level, you sort of got that, right?
Yeah.
But how did that help you in your trading specifically?
So it helped me because there was a time, at the time, you'll remember this, when I actually went through 15 losing trades in a row.
Right.
And because I had actually gone through those 15 trades, it hurts, it really did. But one of really understanding the law of large numbers, I then was able to just say, do you know what? In the sequence of infinity, matter of fact, because I'm going to have infinite trades, say infinite, we will die at some point, but,
but lots of trades.
into the future, this 15 losing trade sequence is nothing, when you look back on what is actually possible with losing and winning trades.
So what you're saying is it essentially underpinned your ability to keep going in the face of that adversity.
Absolutely.
And what's really interesting about that is that this is the whole trader issue, is that everything's today, everything's now.
Yep.
If you have a losing trade, you want it back before the end of play today. In fact, you probably want it back 2 seconds after you lost it, right?
Absolutely.
There's this urgency to just like everything's now, problems. People find it very difficult to move forward and go from day to day to day, facing these challenges and being able to learn to deal with them, because this is the other part of trading, the holy trinity, right? It's like the first thing is get your mechanical process down, then get to understand the parts of your process that are maybe outside of your sphere, like things like an argument with a spouse or partner, or that's impacting on your process, right? Those external things, lack of sleep, hangover, whatever it might be. Yeah. And then the final part is the being able to cope with the emotional process. And what you're essentially saying is this underpinned and allowed you to deal and learn about that element of the game.
Absolutely. You can talk in theory about and really understand that, okay, it's it's the long game. I understand that I'm going to get, 9, 10 potentially losing trades in a row. It doesn't matter what your winning percentage is to a certain extent. There's odds, those odds can, come into play. But as soon when you actually, if you're, and I was going to say unlucky, but if you're lucky enough to go through it and come out the other side, right? Because it does build the character, and it does make you a more resilient trader. You understand, that, and once you go through it and you come back from it, right? It does. Now everything else kind of seems like, okay, what? 4, 5, 6 losing trades in a row, no problem. 7, 8 losing trades in a row, no, I've been there.
You've been there, right? You've been the dark side.
Absolutely.
You trust yourself too,
I
right?
trust myself
Now,
absolutely to get myself out and just follow the process. Just
do
keep.
you know something? We're gonna look in. We're gonna explore the process in just a sec. But there's a famous lady. I always forget her name. Is a hedge fund manager from Connecticut, and
Linda Rashke, is it?
no, it's not. It's not Linda Maskey. No, anyway, the story. I think the story's more famous that she went through like a 3 year period of drawdown.
Right. 3 year
3 years. Yeah, and one of the big challenges with any hedge fund is there is inflows and outflows, right? It's like, how do you attract capital?
Yeah.
Well, if you're on a 3 year drawdown, that's not that exciting for the potential investor versus people who are in that process are going, man, I'm just getting spanked. I want out of it, and it's also dependent upon where they joined in that drawdown as to how they feel about that as well. And she kept going, and if you'd had a 100 grand with that lady over a 13-year period, I think it was worth about $14 million today. So can you imagine how she had to trust herself and rely on a process? And yeah, she'll have statistics and data and all of that, but it takes fortitude to do that. And essentially, on a smaller scale, you had your own moment like that lady. It teaches you a lot, right?
It does. It really does. All the theory in the world. And you think you understand it until you actually, experience is the best teacher, is it?
Yeah. So I just wanted to explore it a little bit further. So we have the process of the mechanics of taking the trade. That's number one, and everyone's trying to figure that out, right? There's lots of shiny things. People are being dragged off into all these different directions. What Simon said the other day in that other interview is key to getting you to that point in a confident manner. So do watch that video, because it gets you to the point where you've got something mechanical, but then that's only probably less than half the battle, right? It's now on to the emotional process. So talk to me a little bit about the different ways that can present itself, not just thinking about the loss in isolation, like all the different types of situations that can occur that's helped you to essentially deal with.
So different types of scenarios.
So like a different type, like a loss that was brutal, like it happened in a flash of an eye, or the different types of price action.
Oh, okay. Right. So yeah, you get those trades where you're sure, you're never really sure, but you enter and you have the slow death. I'll say slow death. It's a bit dramatic, but you have the one where it takes forever to go anywhere, right? Yeah. And then in that trade, I remember I used to think to myself, oh, do you know what? Let me just cut it short. Let me just get out. And then it would...
Yeah, and it's up and down like a horse jaws, like that type of...
Yeah, and you're seeing other trades go in, and other currency pairs, depending, and going in directions, going here, going there, and there's your trade. In that one trade, you're thinking to yourself, oh my Lord, I picked the wrong pair and it's not going anywhere, and, let me just get out. And then all of a sudden it goes in your direction, right? And then there's the one where, and when you make that trade, you really the emotions of things like boredom, come into play as well. Which
I've closed trades off, like the one you just mentioned there, where it doesn't seem to go anywhere, because I was essentially in some form of trading purgatory, right? Yeah. It's like emotions are high one minute as it seems as if it's going to break that upper range. Hits the range, reverses, now I'm like on the bottom again, and it's like it's just this roller coaster of emotions, right?
Yeah.
But the law, totally taking on board the law of large numbers, allows you to go through those moments and deal with the different emotions. Would you say that's fair?
Yeah, that is definitely fair. Just understand that it's just one trade. It's just one trade in...
So you're like rationalising it to yourself.
That's exactly it.
As you're actually going through it.
Yeah, you do. You're just saying it's just one trade, and the next, go on to the next one, etc. There's trades where you kind of get hit. Your stop loss gets hit straight away. how do you feel about that? Do you revenge trade? Do I revenge trade?
Because that's the moment where it's the most you're at you're most vulnerable, right?
That's exactly it. You're at your most emotional because you've just made a trade. You've been in it for not even less than a minute. Then all of a sudden something comes out. Boom.
Boom.
You're spiked out.
Yeah.
And then it's like
So that's an extreme of
yeah.
of how you can feel.
Right. That's exactly it.
And people don't realise there's grayscale to that, isn't there?
There definitely is. There's definitely in-betweens. It's just emotion. Trading is extremely psychological. You really have to be, and I know it's a cliche, but you really have to be a robot or a sniper or just be, some sort of psychopath.
Psychopath.
Yeah, something that you mentioned years ago is just be a trading psychopath. Don't care, don't have the the empathy or the sympathy for the trade. Just literally be a psychopath. Move on to the next trade. Move on to the next trade, etc.
Yeah, and we should clarify that being a psychopath is not... that's not what we're saying. Mark's saying he wants a tribe of serial killers. No. But it's like... But yeah, so it's an aspiration,
yes,
is what that is. An aspiration to be a psycho.
Yeah.
You probably... not going to get there, right? But at least you can learn to cope and turn the volume down on those emotions.
Exactly. You're always going to have the emotions there, but like you said, it's very low volume to the point where you feel a slight tinge, right? And then that's pretty much it. You just now.
So tell me, when you have that tinge,
right?
Tell me what you think generally. Are you recalling experiences? What are you doing? How are you coping with it?
So mentally, it's just I look at a trade. I lost one recently on the euro dollar. It was after the good data figures. I think it was last week, Friday, or Friday before.
Yeah, good data went the other way.
Good data went the other way, right? Now, in years past, I would have been asking why. Why did trades go?
Have I done something in a former life?
Right. Why did it go that way? There's good data. I literally, I think I ended up waking up to the loss, right? And literally, it was like it wasn't there anymore. My broker, and then I just thought, okay, next one. That was literally it. It was like you get the
No swear words.
No.
I still have a swear word or two. It's like, shit.
We're really just well, I've got to the point where I understand. I've been through so much in the market that nothing surprises me anymore. I'm not basing all my hopes off of one or two trades. I understand.
So that what you just said there, what you said there is just before you go on, what you said there is super important. So it's like, it's as if every single challenge that we have, usually it's looked upon as a really negative experience. But what you're saying is you're looking at it as actually those experiences, you've looked at them as a positive thing to essentially be able to recall that information in this moment to deal with these circumstances that you've seen before, right?
Yeah.
You've dealt with it.
Yeah, exactly. Again, just my own personal experience going through the 15 losing trades in a row. That's always in the back of my mind. 1 or 2 or 3 losing trades is really just nothing.
So I want to explore that. So when you're going through a new drawdown now, Leon, which is obviously a normal and necessary part of trading, and it's just the difference is the individual, how good you are and how you developed, also the strategy and the capabilities the strategy has. But when you're going through that drawdown now in those early stages, does anything, and I'm kind of putting words in your mouth here, but does anything change in terms of your approach to the next trade?
No, absolutely not.
So your process is you're just totally committed to the process?
Yes.
No hint of even trying to be sort of what I'm trying to get at is, does your quality of your application of the trade is there any uptick there, or is it?
I do look back at the trade and say, okay, did I take the best trade possible? Was that the absolute best trade I could have taken at the time?
Right. So you're trying to look back and see
That's
if
exactly
there
it.
was anything you
Yeah.
could have done better. Do you write that down, or is it just something you just sort of scan over and just think about, or?
I used to write it down. I used to really be. I don't know if I ever showed you like my Evernote journal. You know, it's funny. I was looking back on it.
Yeah, I've seen
Yeah. You
millions of
know,
notes.
yeah,
Yeah.
loads and loads, years of notes in there. Again,
Yeah.
now I've got back to that point where it's like, because just like, again, maybe just mental reps. If it was the best trade I've taken, I'll probably just make a mental note. If it wasn't, etc., and then I'll just I will move on. But I would advise traders to definitely, it 100% helps to write everything down.
Keep some sort of diary.
That's exactly it. Keep a diary, keep a journal, make notes. It might get repetitive, but as long as you're
Yeah.
making those mental representations, then move on to the next trade. If you're in a drawdown and you're taking the best trades, that you could have taken, and there was nothing else that you would change, then just keep taking those trades.
Yeah. Okay. And we should say to the best of your ability
To the best
for where you are, yeah, at that moment, because we're all at different levels,
level.
right?
Right.
We're all the part of journaling, part of like the amount of notepads I've gone through and pens, is just unbelievable. Got boxes and boxes and boxes of it. Seriously.
Yeah,
Why do that if you're not going to review the information on a regular basis? Well, you should if you've got the time.
exactly.
Review those notes. But we all have busy lives and stuff like that, so it's not always possible. But what it does, there's something about writing it down
Yes.
that sort of entrenches it in your memory, so that when you're in that situation again and you've clocked it before and you're like, I've seen this before, or I've felt this way before, or and it just somehow puts it into the memory bank, and you can recall it. So it's great from that perspective, I think.
Absolutely. I'm quite a visual person as well. So I learn visually and by doing, whereas some people will learn by, kind of sitting in a classroom and being, taught and things like that. I'm a doer and quite visual. And so I used to take loads of pictures, screenshots for everything.
Screenshots are
Yeah.
key, yeah.
Screenshots with notes. You'll remember my notes I used to send over.
Yeah.
With detail here, there, everything.
Yeah.
And then you get to that point where, again, I think it's just over time you get to perfect your process, or get as close to perfection as possible with your process, and from there,
Okay.
drawdowns don't bother me.
So when you say process, explain process.
So process for me is just step by step. What I'm looking for first, second, third, fourth, the most important, down to maybe the least, and maybe like the nuances of the trade, and the method that I suppose you taught me. It gives you plenty of time to do that. Right, just waiting for the setup, right, and trading. I trade now on higher time frames as whereas before, when I first got into trading, it was really lower time frame trade, trying to look for hourly, and below. But now I literally just daily and up, and 4 hour as well for my entries, and literally I've got plenty of time to plan, to trade, to visualize, to look at exactly what my process is, what it's going to be, everything. And then it's literally, once or if price gets to the zone, again, the only other thing I'm probably looking for is if anything has changed sentiment or fundamental wise, because that can obviously change in
Right, so you've got a setup, and you say positive euros, and
yeah,
there's just been some negative euro news out. You know, that might
yeah.
nix the trade.
Yeah, that's exactly it. I'm not gonna. I've been through this, I suppose, love-hate relationship with fundamentals and sentiment,
Yeah, yeah,
over the years. But now I've just realised, if you can stay in line with the fundamentals, you always have to have a reason why you're buying. Technical analysis is technical analysis, and people, are successful just trading technical analysis. But I want
yeah.
every single edge I can and have in the market available to me whenever I take that trade. And people may dismiss fundamentals, but fundamentals and sentiment is really what I focus on, first, and then even just before the trade. It's almost like the sandwich: fundamental sentiment, then the technicals, then back to fundamental sentiment once the setup is there, just to see if everything's okay, and then
Yeah.
trade.
I'm reminded of I guess a mantra, I guess, that one of my mentors, he was a former JP Morgan hedge fund manager, said to me, and it was, quote, "Trading success equals good reward over risk plus the elevation in probability of achieving that reward over risk." So what you're saying is you're trying to elevate.
Right, exactly. Always trying to have the odds on my side from a technical perspective, from a fundamental perspective, and also from a psychological perspective as well. My own personal psychology, and from other traders, psychologies, because, trading being a zero-sum game, it's, again, something that you taught me. It's not nice, but unfortunately we are in the, for when one trader wins, another trader has to lose, and other traders have to lose. And if the majority of retail traders are losing, I'm trying to take the other side of those trades.
What did Jordan Belfort say? The Wolf of Wall Street. If you want to save the spotted owl or whatever it was, you can do whatever you want. But while you're here, you've got to be a killer, right?
Right, that's exactly it. You do. And again, it's not nice, but we're in it to, make a profit. Unfortunately, but that's just what it is.
Well, I always think of it this way: don't feel too bad, because the people taking money off you, they certainly don't give a fuck about you. So.
Exactly.
And I can swear it's my show.
So yeah, it's all of those things that I do think about when I'm in the trade. And again, I think over time I have developed my mental processes, and I've got it pretty much down. I do actually have it still written out as well, in steps, in stages, but it's got to that point where, I pretty much nail it, 99% of the time.
Okay. I actually think there should be another form of analysis, which is psychological analysis.
Yeah.
Be it from your own perspective, and also the market psychology.
Absolutely.
I think to just ignore that's part of a trading chart is ridiculous.
Yeah, it is, and it's something that is just, I think it's, whether it's known or not, I don't think it's very well known or rarely.
Yeah, so everyone experiences it, but no one's kind of quantified it, I guess,
Yes.
and made it a big thing. But
Yeah.
all right, good stuff. So where are we? We've come from blowing a load of money to finding something that resonated with you.
Yeah.
To understanding the mechanics of how probability distributes, which
Yeah.
in turn allowed you to essentially take trades and focus on the process of taking a good trade. That's about it, isn't it? What else would tell our listeners?
Another thing I wanted to say as well is the power of risk reward. And again, it's cliche. It's something that people, for some reason, they know, or you could show a trader the power of risk reward. So, for example, risk more than you go for more than what you risk. Right, 2 to 1s. This is another thing that really got me through the 15 losing streak was the fact that I didn't.
You came back from that, right?
Right, back from that was the fact that I didn't have to necessarily even win, even 50% of my trade in order to get that money back and more. So, 2-1 as a minimum. All you have to do is win 33% to break even. So if you're winning at 35%, 40%, 45%, you're going to make a profit. It's just the how the maths will distribute, right? If you
so that's super interesting. So basically what you're saying is, everyone hears it kind of like
yeah,
it's all over the place, 2-1 reward to risk, 3-1 reward to risk. But what you're actually saying is, first of all, break even is really low expectation trading, right?
right.
It's like 35 losing trades in a row, 35 winners, and you're at break even if you're 2 times risk.
Right, that's exactly it.
So that's not some like crazy, 90% win rate. Or so it's actually low ball expectation.
Exactly. It's really kind of the actual base. You have to ask yourself, can I win 3% of the time? Right? If the answer is yes, the absolute worst you're going to do is break even. If you're going,
Yeah, I mean that's not including commissions, but basically that's the math, right?
Like just from a maths perspective. And if you're going for a 2-1, now obviously back then from a mechanical perspective, it's fine. You go for 2-1s. There's trades where, and this is where again I think developing maybe as a trader over the years, you understand where you're going to go for more than risk reward because of fundamental sentiment. Why are you going to jump out at 2-1? Something that you taught me, matter of fact. I used to do this all the time. Is just literally take the money and run 2-1.
Yeah, because the urge is to take the money, right?
Right, and that's exactly it. The urge is to take the money, right? And it's very
that in that moment too.
Absolutely.
And what you're essentially doing is you're bastardizing the future.
Right, that's exactly it. And there are times where you're in a situation where you're in a drawdown, and it's hit your 2-1. And from a fundamental maybe sentiment perspective, let's say for example Brexit just happened, right? The pound is selling off, right? Why? And you're on the right side of that trade. You've sold the pound. It's like, right. Why are you taking a 2-1? Like
2-1, right? Okay.
Absolute madness be to take a 2-1 in that situation, and then there's other situations where obviously, you're just not going to do it. But from a beginning perspective, from anyone who's listening to this and is struggling with necessarily kind of, making a profit, etc. And maybe just fundamentals and sentiment, etc. And maybe want to keep things as simple as possible. Just think to yourself, if you want to be profitable, 2-1. Perfect process. Start from there. I think that's where the baseline of when I started becoming consistently profitable, and then it was like I built from there. I started the emotional side and stuff. And sometimes you'll get your 2-1 trade, and I'll not take profit, and then I'll go it'll price will come back and stop me out. So be it. But again, it's just a process. You go through it, you understand that, what, and it's nothing, and again, it's nothing wrong. I don't think as well that everyone may get to that situation where they can or know how to, see trades go for a 3-1 and then come back and be stopped out for break even. Because the natural reaction is to say, do you know what? I'm just going to keep going for 2-1s. Or I'm going to keep going for 3-1s because the last 2 trades I could have taken money off the table, and I haven't, right? And there's somewhere in between that. There is a balance, obviously, and this gets into maybe the more advanced stages as well. But from a starting out, just understand that, can you be right more than 33% of the time, 35% of the time? Then yes, okay. 2-1s, let's go.
So you've said a lot there, so let's just try and unpack a bit of it if you don't mind. So that was brilliant. So this whole idea of 2-1, essentially losing 65% of the time, which someone will say, well, why I want to make money. But what it does is it should seem as if, therefore, it's possible. Not losing money is a great place to start, and then any increase in your own capabilities is you're going to have those upticks, as Leon mentioned earlier. You go from 35 to 40%, 45%, and so on and so. Now you're making money, right?
Mm-hmm.
now you're off, and then that's just a question of improving your own processes and maybe strategy, etc. But you're away at that point.
Yeah.
So it's achievable. And the other thing is, a really important point you make, is nearly reaching 2 to 1 or 3 to whatever the metric is, and then it coming back and stopping you out. That, on the face of it, would seem like utter madness, because one of the good old trading maxims that is total BS is never let a winner turn into a loser. It's not that people can't learn to do that and be really good at that, but it misses the point that if you're not prepared to do that, at least you haven't reconciled the psychology of trading.
Right. Exactly.
Because you're still, if you can't hack that, you are massively predisposed still to potentially blowing up at some point.
Yes. Yeah.
Because that'll then lead to,
exactly.
revenge trading.
Exactly. It's going to come back in other ways.
So if you can take a trade like a man or like a woman, and get close to your profit target, and it come all the way down, and you lose money, you're a rock star if you can take that on the chin and move forward with no residual angst into that next trade.
Absolutely, because you're in control. You're in control of your emotions. Like there's so many situations that happen in trading. Everything is possible. We're all trying to make money. Everyone's in different financial positions. So, if you need to make your daily bread or your weekly bread or whatever it is, right, and you've just seen price go in your direction, P&L, and then it go back, that external pressure of having to make money is going to, make the wrong decisions.
It's a great point that you're making.
One of the turning points as well, going back to just the turning point in my trading, was realizing, and again, it sounds like another cliche, is don't think about the money, or just focus on the process. Just focus on the process no matter what. It's just one trade, because if you're thinking about the money, it can force you to make wrong decisions.
Yeah, so what you're saying is, once you start thinking about the money, you're going to start messing with your process, and ultimately then that's just a one-way ticket.
Take profit too early, and you make mistakes, you revenge trade, etc.
Yeah, I mean, that's a great point. And can I just say this as well, that like if anyone's out there and they are in that position, and there are many people who are out there struggling and wanting to find a way out and stuff, totally get it. If you are in that position where you're thinking, oh, can this cover my rent and the simple answer is no.
Yeah.
Right. Even if you can somehow do it for a period of time or whatever, it's not the right, because as Leon quite rightly points out, it's that holy trinity again, right?
Yeah. It's
that external process which is going to have an impact in your mechanical process.
Yep.
Which ultimately is going to lead to disaster. Now, here's the other part to it. So what, and I don't want to sound as if, oh, well, you shouldn't do it if you're in that position. No. Trading is the greatest career on planet Earth.
Yep.
No stock, right? No staff. Do it anywhere in the world with an internet connection. Blah, 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 blah. All these great things make a ton of money. But you have to be able to do it when you're not under pressure. So for my advice to anybody who finds themselves in that position, go and get some type of other job that you can do, that maybe a night job, and that's not going to be great for sleep, I appreciate, but there's going to have to be some concessions, like get a job, save up some money, and then come back to it, because you can always come back to it. I could take you away from your screens and put you on a desert island, and so long as you've got a computer and a connection, you're good, right? So long as you're prepared to study and do the work, maybe divert and do something else to take the pressure off, and then come back to trading.
That's exactly it. Don't if you can. And again, it's very difficult because it's been sold as you can make money quick. And one of the problems with trading as well is the fact that you're always reminded on a price chart where you could have made money. Always. So, I used to think this as well. I used to look at a price chart and I used to say, if I would have bought there and sold there. If only I would have bought it. And so
like edges everywhere.
yeah, edges everywhere on every time frame, on every, everywhere. So it's almost like you're trying, or I was trying to not think about the money, but at the same time, looking at a price chart and thinking and seeing where the money was made, if you know what I mean. Yeah. So you're always, even subconsciously, looking back at past levels and seeing where prices have gone. And I could have made money here. It's like hindsight bias. I could have made money if only I would have bought here, if only I would have bought there, da. But you kind of got to take that away. You got to take everything away and just trade, like we said before, to repeat ourselves. But just the process. Don't think about the money. Think about what's the right action to do.
The process is your edge, right? It's the mechanics of the edge. And edge isn't everywhere, contrary to popular belief. But when your edge is present, you have to act.
That's exactly it. That's exactly.
Win, lose or draw. It doesn't matter what the outcome is. You should not, as Leon correctly says, don't attach happiness or sadness to these different potential outcomes or ultimate outcomes. No. You've got to essentially just take the result, whatever it is. Your edge presented itself. The happiness or sadness should be attached to, did you execute on your process to the highest standards you were capable of? And we all make little mistakes, but so long as they're not career-ending. If the answer is yes, then congratulations.
Yeah.
And then you just move on to the next independent event and rinse and repeat.
Yeah.
And if there's anything in that process where you feel that you're weak, you should always go towards your weaknesses. And try and learn, like maybe there's a book on psychology. Maybe we can't help you with that. So maybe you buy a book on trading psychology specifically. Maybe the book was helpful, but maybe you need some proper one-on-one coaching with it, right? Whatever area you understand is weak in your process, go towards it and try and fix it. And then you're always certain that gradually all you're ever doing is you're constantly on a trajectory of improving and increasing your process.
That is 100% correct. Move towards your weaknesses. It's something we don't like to do, but in trading, it is absolutely essential that you do that.
Yeah. And the thing is, and I talk about this, it's not some utopian version of you as well. I don't think it ever ends, right?
It doesn't.
But it gets to a point where you just make your money. So, do you know what I mean? You're off at that point.
Yeah. Yeah.
But it's never perfect. But that's so long as you're moving to. If you move towards those weaknesses, you're heading in the right direction. Mm-hmm. So we're on the right path, and then that can guide you, and you'll hopefully from that lose this sense of hopelessness that you don't know which way to turn.
Yeah.
I just want to quickly pick up on a couple of things, going back a little to the money management idea. I don't know whether did you ever come across the Tom Basso experiment that he did with Van Tharp? Did you ever come across that?
I know the author Van Tharp, but I don't know that experiment. No.
Right. Well, Tom Basso was one of the market wizards in one of Schwager's books, and a successful hedge fund manager, retired now. But he actually worked with Van Tharp on the whole money management type question. Mm-hmm. And they took random trades. They did like tons of testing on random trades, and so long as there was multiples of R, mm-hmm. they made money. To varying degree, like drawdowns are bad in some places. Do you know what I mean? But and they were just randomly entering. There was no reason to enter. They would buy, and then the next time they'd sell.
Mm.
And the outcome was whatever it was. It always made money. Get your head around that.
Wow. That's crazy.
So it goes back to the earlier point. Someone sat there now thinking, well, why the fuck do I need to? Why do I need to study fundamentals? Right?
Yeah, I know. It's the easy one, and again,
but it's the uptick. It's the uptick in performance is what we're searching for.
Yes, exactly.
And that uptick comes from that, right? It's the elevation in probability. That's what we're all trying to do. We're trying to increase our numbers. But if you randomly did it and you could emotionally handle it, you could be chucking darts at a dartboard and attach a risk to reward,
right,
a positive risk to reward, and make money, right? Mm. Not simple because you've got to deal with the emotions and things and the big drawdowns, etc. But if you just take that as a baseline, that will make you money, and then work towards improving on your process, etc.
Exactly.
you're going to be in good shape.
Yeah. In every endeavor.
In every endeavor, yeah. And I kind of feel as if I want to stop now, but there's a good place to stop. But I want to just make one more point about losing and drawdown and the emotions of that. You're going to have it. If you take a trade and you lose, you're going to have this, like a balk reflex to get that money back instantly.
Yeah, absolutely, yeah.
Right? Yeah. Everyone experiences that. So you've got to fight against that and just wait for your edge to present itself again, and then you go. Now that might be in 5 minutes time for all I know, but it might be in 5 days time too.
Yeah, that's another one. Yeah, that's another one.
You've got to be able to go to sleep, for fuck's sake, right? Just don't worry about it.
Yeah.
But there's recency bias, and we hate it. But then extrapolate that out into multiple days, multiple trades, a month.
Yeah, a month. You might have a losing month. You might have a losing 3 weeks, right? And that pressure to try and make, you put on yourself, to try and make that money back. I remember I didn't take a trade for, I think the longest was, maybe about 2 weeks. I think maybe about a week and a half going into 2 weeks, I didn't take a trade. And again, that taught me that you have to wait for your setup, the patience.
Got to be patient.
Yeah, you have to really wait for that setup. You have to wait for the pullback. You have to wait for whatever it is, whatever your edge is. And I think, again, we get drawn into quick money. It's, why am I waiting 2 weeks and I could have made all this money on the 1 hour chart or the 5 or the 15, etc. Right? I'm not saying that everyone should do it, just the way that it presented itself at the time. That hasn't happened in years. We'll say years, but a couple of years. But I do remember that vividly, is waiting for ages for a trade. In fact, I must say, I did miss in that week and a half, nearly 2 week period. I did miss, I think, 2 trades. So it wasn't out of, me just sitting around waiting on my hands. It was literally like, other things were going on, and I did miss some trades in there. So I didn't actually take a trade within that time. And there was plenty of time for me to think to myself, I need to make this, this.
Yeah, it's like, gotta get it back. Plenty of time to do your own head in.
Yeah, that's exactly it.
Here's the thing as well, is that recency bias is not only on a trade basis or a daily basis or a weekly basis. It's potentially worse on, it's probably not worse in terms of the losing trades, probably more like emotional and instant. But when you've had a high watermark in your account and you're looking down, you're looking from below it, looking up, that can drive you nuts and again bastardize your process, because you're off thinking this is the Holy Trinity again, right? It's the external issue that's going to cause you a problem tomorrow in your trading, and you're going to feel these things, guys, but it's being able to isolate all of that and focus only on process.
Yeah, trying to get to that equity high, is another one.
Yeah. That's it. That's a big thing, right? It's to get,
absolutely. And you haven't done it for, a month or 2 or 3, or, it could be even longer than that. And you think to yourself, what is going on? What is happening? Yeah. It's just not working kind of thing, but you have to go through the process.
You have to go through it. And here's the other thing. If people say, well, I'm patient, or maybe I'm not, or I can't, I want to play, I want to get involved and stuff like that. I always say to people, because we trade high time frames, and I hope this is coming out in the sessions, the interviews that we've had so far. There's a common theme, guys. Everyone I know trades high time frames who makes money. So just think about that. So then, okay, if that's how we make money, and we'll maybe explain in a moment the reasons for that. If the high time frames are, and you struggle, where most people make money and you're struggling to be patient, that suggests to me that you are somehow great in every department of your trading, because right? Because you must be just perfect at trading, because what you should be doing, if you're not perfect, is using that time to improve where you're not very strong.
Yes.
That's like, you should not be bored.
Yeah. Exactly.
There should be no such
thing as boredom. You should be practicing, like you said, going towards where you're weak. Practice those mental representations. Find out if I'm, if I'm struggling with taking profits too early? Why am I taking profits too early? Is it because I need the money? Is it because I, lack discipline and self-control? Is it because I need to pay off my car payments? Is it because, just keep asking?
The answers are there, right?
There's always an answer there, right? And it usually is outside of the process of why you should be, not taking your, doing the right thing.
Yeah. Okay. And just to clarify, everyone I know who does make money as a trader does trade higher time frames, 4 hour daily, etc. Here's the thing. There will be people out there, guys, if you're listening to this and you're like, oh, screw that, I'm not taking trades on those high time frames. There's a few things you can do, right? One, increase the amount of charts that you're looking at, even asset classes. So you can make yourself more active, not by reducing time compression, but by giving yourself more choice, more chances. So I should say that, but I should also say that the smaller time frames, Darwinian, right? There's always someone going to be bigger, stronger, gets all the girls, gets all the guys. Mm-hmm. There's people who do make it work, but it's very, very difficult. Mm-hmm. Very difficult. Like, what would you say the reasons why it's so difficult, Leon, to trade those lower time frames?
It's really because you've got to think about who is buying, who's moving the markets, and what kind of size and how much of that currency are they buying. I guess this could get into things like, stop hunts, etc. But higher time frames is where the big financial institutions, will trade. And it's simply because of things like liquidity. They need to build positions. We don't know how long they're going to take to build positions. But within those lower time frames, where you might think that you're seeing a 5-minute trend is, to the upside, is maybe them just accumulating the other side of your order, so yes. It's going to be chopped. They need to kind of disguise how they're buying, how they're getting in, how they're getting out, the time that they're getting out.
So you can get a little bit snowblind by the noise on those lower time frames.
It's a lot of noise on there, and like you said, there are traders that can and do make it work.
Absolutely.
I've just found that, using the daily as my absolute baseline, and then obviously using, 4-hour charts, just literally for entries.
And just add, it's a lot harder to focus on those low time frames. So if you think about the immediacy of the emotions that you have when you have a loss, you can end up having 10 losses in a bloody day.
Yep.
Put a great big dent in your account. It's also the arena of the algos. Right. They're the ones who can execute in and out before you've even done anything. Yeah. Our order execution is so slow comparative. You can't beat them there.
Yeah.
Right. And there's lots of other reasons.
Yeah.
The industry wants you to churn through your account, get that spread commission. Everyone gravitates towards it. But when you come out of the compression, it levels the playing field.
Yes, you can see more clearly where you are, where price is, what...
It's karma, right?
Yeah, exactly. And every day you're just looking, and even every week you're just looking to see what's happened. Okay, cool. That's where price is. That's where value is. This is what's happened that week from a fundamental and sentiment perspective. Is price, is the likelihood of price going to go, higher or lower from, this all-time high or this recent high or etc. And you're just like, okay, cool. You know what? And it's funny because I was saying to a trader as well that lower time frame traders will rarely look at higher time frame trading.
Yeah, so they're just focusing on the lower time frame where we could go high time frame, lower time frame, but use the higher time frame levels. Is that what you mean?
That's exactly it. I don't know why I've got kind of tongue-tied.
Yeah, it was that. He was like, "Oh yeah, I see what it is." Yeah, so we can use. So basically, what he's saying is that they just remain and they're looking at the structures on the 1-minute chart. Well, these structures are very, very unstable if you contrast them. So they stay there and they're not utilising the higher ups.
Right.
Whereas what we could do is we could utilise the higher up level, go down, look for a tight entry as an example off the low down, and that's
absolutely. That's what I was trying to say through there. But anyway.
Yeah. Yeah, absolutely. That's a way of doing it. So don't think that we're saying you can't look at the low time frames for an entry or something like that. Get a bit more detail, but do the analysis and set the trade up off the higher ups.
That's exactly it.
Cool. So, any advice to the new trading or the struggling trader?
I would say
Apart from buy my course.
yeah, what turn my trading what turn my trading around 100% is get a mentor. Get a mentor because trading is a lonely game, right? And you need the guidance in almost every other endeavor. In order to be successful, there are, you got to kind of walk in the path of people that have done it before. And yes, you can make some money off of, I suppose if you're doing it manually by watching YouTube videos, etc., etc. But what cut my time, what really turned my trading, number one thing was finding you as a mentor, someone who had done it before, who'd been there, shown me exactly the steps that I needed to take for me to get to where I needed to go. So if you are struggling trader out there, new, definitely 110%, please get a mentor. Find one, yes. Email someone, and then go from there, if you trust them, obviously, and things like that.
And what you point out is really important, because for some reason in our industry, it's as if like teaching is like a swear word almost, But we've talked about this. I'm driven by that dyslexic child who's sat at home and realizes that education's not going to work for them. Mm-hmm. And they feel isolated, and they feel as if the whole world's against them, and a low life quality expectation is all that's in front of them, mm-hmm. right? And they're depressed, and they're sad, and they don't see any way out. I do it for that person. Yeah. I do it to try and help those people. Yeah. But for some reason, and everybody in between, right? Yes. But for some reason, we look at trading and we go, like you say, in any other industry, it's the speed element, mm-hmm. that changes. Mm-hmm. How long do you think it would have taken you to be profitable if you hadn't have found a place with a mentor? What time scale do you think that would have added to?
Probably not. And that's just not me being extreme, but no, probably not. I wouldn't have been.
Because it's just got sheer dumb luck that you would come across the information in the right order. Right. And who's to say you're going to come across it at all?
Exactly. Again, just the things that, I was shown by you. And remember, I'd paid for courses. So I had, I suppose, what would be considered as mentors, as in, an educator or educators who, through their teachings and as far as the screen and screen time and videos, were saying, okay, well, I can show you this and show you that. But when I talk about a mentor, someone that you can actually literally kind of pick their brains, if you know what I mean. You can actually, if obviously you get to that kind of relationship. But
that's an important point. We have a relationship, right? We're friends.
Yeah.
And that's the potential benefit of having a mentor as well, isn't it? That you can ultimately, the student-teacher relationship blurs a bit over time.
That's exactly it. And having that relationship with somebody and let it develop naturally. Some people you just won't, kind of gel with, etc. But you just, just life kind of thing. But just because you maybe, don't gel with one person doesn't mean you should give up on trying to find somebody that can potentially help you as well. And I understand there's people trying to make money out there, and it's a shady game, etc. There was a lot of charlatans, etc. But if you can somehow find a mentor, and that will we'll say they will, but depending on obviously if they're profitable themselves.
Any good, yeah.
It's right. You know what I'm saying? Then that will definitely accelerate your I think that was definitely the one thing when I reached out to you. That is definitely what changed my trading for the better. If you are still struggling, some people, they're just trading indicators and algos and they're successful and they might not need one. Fine. But if you are struggling and you've been through course after course after course, etc., system hopping, if someone is willing to mentor you, reach out. Just reach out. What's the worst they could say? The worst they could say is no.
Good. And as it happens, Leon's gone on to start his own education business now.
Oh, yes.
And where can the people reach you, Leon, if what you've said today has resonated with them and they'd like to reach out and get in touch?
At trading180.com.
At trading180.com or trading180.com on YouTube.
They can reach me at trading180.com or email me at info@trading180.com. I am all ears. You know, you can just kind of subscribe to the YouTube channel. I do believe that it would be, and we spoke about this as well, Mark, that it'd be extremely selfish for example, for someone who has the knowledge to not share it, if you know what I mean. Oh,
yeah, if you're making money, you're a trader. It's selfish if you don't pass that.
Right, exactly. Pass the knowledge on to people who want to, be involved as well. You can't just take them off the street and go, oh, okay, I'm going to try and, because if they're not interested.
Yeah, because they're not interested.
That's exactly it. But from a knowledge perspective, it's something that, again, just gaining from you is definitely just try and help, again, just for that person who is, potentially struggling, right? If I can say something, do something, help to, improve, then I'm definitely all for it.
Brilliant. And I just ask you this final question. Do you believe that if someone's committed and willing to put the work in, do you believe anyone can become a trader?
100%.
As he drops the mic. Leon, thank you very much. Thank you very much for your time today. Really appreciated it. I hope everybody has learned an awful lot from this interview. It was a pleasure. Thank you very much, mate. Take care.
Thank you as well. Thanks, Mark. Take care.